You assume that your stop loss is far enough to survive normal volatility. But assumptions without testing are landmines waiting to explode. Backtesting forces you to face those assumptions head-on. It's not about proving your idea works in some ideal world. It's about seeing how it behaves in every condition the market can throw at it. Tell me, would you rather discover your weakness in a test or in a live trade with real money on the line? The human mind loves confirmation. We crave it. It makes us feel safe. But trading is the business of uncertainty, and safety doesn't come from being right, it comes from being ready. When you only look for setups that support your theory, you're building a house on sand. One unexpected market phase and it collapses. Backtesting should feel uncomfortable. It should challenge what you believe about your strategy. It should show you losses, inconsistencies, and ugly drawdowns, because that's reality. That's how you toughen your system and yourself. The best traders I've known weren't the ones who avoided losses. They were the ones who expected them and built their systems to withstand them. You can tell the difference between a novice and a professional by how they react to bad results. The novice gets discouraged and quits testing. The professional gets curious. He asks, why did this fail? What was different here? What conditions caused this pattern to break? Every losing stretch holds a lesson if you're willing to study it. And that's what backtesting is really about, turning failure into understanding. Because the more you know about your weaknesses, the less power they have over you. When I first began trading, I wanted every setup to look perfect. I'd ignore the bad ones and highlight the good ones. It made me feel like I had found the secret formula, but the market doesn't care about my comfort. The first time that pattern failed miserably, I was shocked. I thought I'd been betrayed by the chart. But it wasn't the chart that betrayed me, it was my bias. I was blind to the fact that I only saw what I wanted to see. That's why real backtesting is brutal honesty in motion. You're not there to confirm your dreams, you're there to expose your blind spots. Think of backtesting like stress testing a bridge. You don't test a bridge to admire how beautiful it looks when cars drive smoothly over it. You test it by seeing how much weight it can bear before it cracks. You push it to its limits. You measure its breaking point. That's what makes it safe for everyday use. The same goes for your trading strategy. You have to see where it breaks, not just where it holds. If you've never tested your system through volatility, news spikes, and trend reversals, then you don't really know your system, you only know its good days. And the market is not made of only good days. When you find the weak spots, you don't run from them, you adjust. Maybe your stop loss is too tight and keeps knocking you out of trades prematurely. Maybe your entry is too late and you miss the best part of the move. Maybe your take profit is too greedy and ends up costing you more than it earns. Each of these flaws, once identified, becomes a point of strength, because now you can fix them. But you can't fix what you refuse to see. And that's the danger of seeking only confirmation. You become blind to the very things that could save you. Backtesting is the most honest conversation you'll ever have with your strategy. It doesn't care how clever you think you are. It doesn't care how confident you sound. It just shows you what is. If you're humble enough to listen, it'll teach you everything you need to know. Every losing streak will tell you when to step aside. Every inconsistent result will point to conditions you should avoid. Every mistake will point toward a refinement. But you have to stop defending your system and start questioning it. Have you ever noticed how most traders defend their losing methods longer than they defend their winning ones? That's pride, and pride has no place in backtesting. The mindset of a true trader is scientific, not emotional. You form a hypothesis, you test it, and you measure results. If the data doesn't support it, you don't argue, you adapt. The market doesn't punish the trader who's wrong, it punishes the trader who refuses to change. And the faster you uncover your weaknesses, the faster you evolve. That's what separates the survivors from the broken. The market doesn't destroy traders, it merely exposes them. Remember, in the previous video about 3 golden questions before entering any trade, we talked about making sure your reasoning, timing, and risk are solid before execution. Backtesting ties directly into that principle. It gives you the evidence that your answers to those questions are valid. Without that evidence, those questions remain assumptions. But when you've tested your method across hundreds of trades, you know the answers by heart. You know what kind of market favors your setup, how long it usually takes to play out, and what kind of drawdown is acceptable. That's power not because you're always right, but because you know exactly where you're vulnerable. The great irony of trading is that strength is born from weakness. Every trader wants a perfect system, but perfection doesn't exist. What does exist is refinement, constant, deliberate improvement born from identifying flaws. Backtesting gives you that clarity. It's the grind that turns raw ideas into polished systems, but it only works if you're willing to face the truth, even when it hurts. Because when you start seeking flaws instead of confirmations, you stop trading for comfort and start trading for survival. And that's the point where a trader begins to grow into something more than just a speculator. Backtesting bridges the gap between strategy and real execution. It's the connection between what you think will work and what actually does work when the market starts moving. Every trader can build a strategy on paper, rules, indicators, entries and exits, but until you've tested it against real market data, it's nothing more than a theory. The market doesn't pay for theories, it pays for precision. Backtesting takes your ideas out of the realm of imagination and drops them into the world of proof. And that's where most traders stumble, because proof is never as pretty as theory. Tell me, have you ever built a trading plan that looked perfect until you started using it? That's because planning and execution are two very different battles. When you create a trading strategy, you're operating in a clean environment, no emotions, no slippage, no chaos. It's all logic and order. But trading live is messy. The charts move fast, your heart beats faster, and fear or greed creeps in. Backtesting is the training ground that closes that gap. It prepares your mind and your method for the battlefield. You see how your strategy behaves across different market phases, bull runs, sideways churn, panic sell-offs, and you learn whether it still holds or completely breaks. That's the value of testing. It doesn't just show how much money you could have made, it shows whether your system can survive. A good backtest builds trust in your own process. And trust is what allows you to execute without hesitation. You can't expect to follow your plan in real time if you've never seen it work in the past. Think about it, would you step into a plane if you knew the pilot never practiced in a simulator? Of course not. You'd want a pilot who has faced turbulence, who knows how the controls respond under pressure. Backtesting is that simulator for traders. It teaches you how your system behaves in turbulence, and that knowledge gives you confidence when it counts. But let's be clear, the bridge that backtesting builds isn't one way. It doesn't only take you from theory to execution, it also brings lessons back from execution to refine your theory. When you start trading live, you'll notice differences: execution speed, emotion, and psychology that affect performance. You can feed those experiences back into your backtesting process to make it more realistic. That's how a trader evolves, through constant feedback between what's planned and what's practiced. The traders who refuse to test, or who test only once and never revisit it, are like builders who stop checking their foundation after the first rainstorm. Eventually, the cracks show. Now, here's something most traders overlook, saying. Backtesting doesn't guarantee future success, but it drastically reduces future surprises. That's the real value. You don't test to predict the future, you test to prepare for it. The market will always be uncertain, but when you know how your system behaves in uncertainty, you gain control over yourself. You learn your drawdown tolerance, your risk comfort, your win rate, your expectancy. You begin to see that trading isn't about guessing what happens next, it's about knowing how you will respond when it happens. Backtesting gives you that map. Without it, you're driving blind. And it ties directly to what we discussed in that earlier video, 3 golden questions before entering any trade. Those questions: why am I entering? Where am I wrong? What am I risking? Are only as strong as the testing behind them. If you've never backtested your answers, then they're just opinions. But when your strategy has been tested across time, those questions become checkpoints you can rely on. You don't guess your risk. You know it. You don't hope your entry works. You've seen it work hundreds of times. That's how you build consistency, not through inspiration, but through repetition. Backtesting also exposes how execution really feels. You begin to notice what drawdowns look like, how long they last, how many trades you might lose in a row before recovering. Most traders quit because they don't understand that losing streaks are part of a system's rhythm. But when you've backtested thoroughly, you already know what to expect. You've seen the dark stretches, so they don't shake you as much in live trading. That's how the bridge holds through familiarity. You stop reacting emotionally because you've already seen the movie before. The process itself teaches patience. Backtesting isn't fast or flashy. It demands attention to detail, careful record keeping, and emotional detachment. You start realizing that good trading isn't about adrenaline or constant action. It's about method. You learn to wait for your signal because you've seen that waiting pays. You learn not to overtrade because your records show how impatience erases profits. In that sense, backtesting builds not just technical confidence, but psychological maturity. It transforms how you think. And let's talk about something most traders underestimate: adaptability. The market changes character over time. What worked in a strong trend may fail in a choppy one. A tested system allows you to spot those shifts early because you know what normal performance looks like. The moment your live results deviate significantly from your back-tested results, that's your cue to reevaluate. That's how professionals use backtesting, not as a one-time project, but as an ongoing benchmark. You're constantly measuring live execution against historical behavior, adjusting when needed. That's how the bridge stays strong by maintenance, not memory. You'll also notice how backtesting humbles you. It shows that many of your great ideas aren't as great as you think. But instead of discouraging you, that humility becomes power. Because when you stop pretending every idea must work, you start learning which ones actually do. You become selective, sharper, more deliberate. You stop chasing the next shiny strategy and start mastering one that's proven. You move from theory collector to execution specialist. And that's where consistency, the holy grail every trader talks about, truly begins. The moment you finish a real backtest, you stop guessing. You stop needing other people's opinions. You stop panicking when price moves against you, because you've already seen it all before in the charts, in the data, in the records you built yourself. Backtesting doesn't make you fearless, it makes you certain. Not certain about the outcome of any single trade, but certain about your process. You know what your method is worth, and that gives you the strength to execute it day after day, trade after trade, no matter what noise the market throws at you. Because once you've built that bridge between strategy and execution, you no longer trade ideas, you trade evidence. Backtesting reveals both market behavior and personal discipline. Most traders think it's only about testing strategies, finding patterns, measuring profits, seeing what works. But that's only half the story. The other half, the one that really determines who survives in the long run, is what the process of backtesting shows you about yourself. Because every time you test a strategy, you're also testing your patience, your honesty, and your ability to follow rules. The charts don't just tell you how the market moves, they tell you how you move when the market does something unexpected. And that's the part no indicator can teach. Tell me, when the data goes against your expectations, do you stay calm and keep testing? Or do you start tweaking the rules just to see the results you want? That one habit alone will tell you whether you're ready for live trading or not. When you begin backtesting seriously, you start to see the market in its purest form, stripped of the noise, the news, the opinions, and the emotions. You look at years of price movement and start noticing rhythm, structure, and behavior. You see how markets rise not in straight lines but in waves, how trends exhaust themselves before turning, how volatility expands and contracts like breath. You realize that markets don't move out of chaos, they move out of psychology. Fear and greed create the same footprints over and over again, and those footprints are what you start to recognize during backtesting. You stop saying the market is random and start saying the market has a language and I'm beginning to understand it. But while you're decoding that language, you're also decoding yourself, because backtesting forces you to confront the parts of your nature that interfere with good trading: impatience, bias, ego. You can't fake discipline when you're going through hundreds of trades one by one. You either follow your rules or you don't. In the previous video on the 3 golden questions before entering any trade, I told you that every trade must have a reason, a purpose, and a plan behind it. Today, we're going to talk about something that tests whether that plan truly holds water: backtesting your trading strategies. Now, don't get me wrong. Most traders don't fail because they don't have a strategy. They fail because they never prove that their strategy actually works. Tell me honestly, would you trust a bridge you never tested before crossing it? Of course not. Then why do so many traders step into the market without testing their bridge first? Backtesting is where the trader stops dreaming and starts verifying. It's where the truth reveals itself, stripped of all emotion and wishful thinking. I've seen more traders ruin themselves because they believe too much in their intuition and too little in their data. You can't argue with the tape, and you can't argue with the record. The past may not repeat itself perfectly, but it sure rhymes enough to teach you something if you're paying attention. When I started out, I didn't have fancy software or automated systems. I had a pencil, a pad, and a ticker tape. I'd spend nights marking down prices, highs and lows, and then trace the same patterns day after day. That was my backtest. I wanted to see how my theory behaved over time. Was it consistent? Did it crumble under pressure? Did it show strength when the market turned weak? Because that's the true test, not how your idea sounds, but how it performs when exposed to history. Tell me, have you ever looked at a chart and thought, if only I traded that setup every time it appeared? Well, backtesting gives you the chance to find out. The beauty of backtesting isn't in the profits it might show, but in the confidence it builds. Confidence is the foundation of discipline, and discipline is the backbone of every successful trader. You can't have discipline if you don't trust your method. You can't trust your method if you haven't tested it. It's as simple as that. And let me tell you something, when you truly believe in your method, when you've seen it work over 100 different examples, you stop second-guessing yourself. You stop being swayed by fear or greed. You act because you know, not because you hope. But backtesting isn't about proving you're right. It's about finding where you're wrong. That's the part most people can't stomach. They don't want to see their cherished ideas fall apart in the face of numbers. But a trader who avoids the truth will never survive. I've blown fortunes because I ignored reality when it stared me in the face. The market doesn't forgive the man who trades on illusion. It rewards the one who faces facts. So when you backtest, don't look for confirmation, look for cracks. Look for where your method breaks down, because that's where your learning begins. Now let's talk about mindset, because every tool is only as good as the man who wields it. When you sit down to backtest, you're not gambling, you're studying. You're a scientist running an experiment. Your job is not to cheer when it works or cry when it doesn't. Your job is to observe. Can you look at a losing streak in your backtest and still keep your composure? Can you admit that your idea needs refinement, not abandonment? That's the temperament of a real trader. You see, the market doesn't pay for excitement, it pays for patience. And here's something you might not expect backtesting also reveals you. It shows your biases, your impatience, your tendency to skip rules. You might think you're following your plan, but when you look at the records, you'll see moments where you would have broken it. That's why I say a trader must study the market, but he must also study himself. Have you ever wondered how much of your trading results are really due to your own discipline, not the market's movement? That's what backtesting teaches you, what's you and what's the market. When I was younger, I thought every setup was an opportunity. I'd see a pattern form and jump in, full of confidence, without a second thought. But confidence without evidence is just arrogance in disguise. Over time, I learned that a pattern must have a history, a track record of performance. That's why backtesting is so critical. It separates the illusion of opportunity from the reality of probability. You wouldn't buy a horse without seeing it run. So why buy a setup without seeing it race across past markets? And remember, backtesting isn't about finding perfection. There's no system that wins all the time, not in my day, not now, not ever. What matters is consistency. You're looking for a method that wins more than it loses and keeps losses smaller than gains. That's the entire secret, if there is one. And that ties right back to what we talked about in that earlier video, those 3 golden questions before entering any trade. You see, those questions help you choose the right trades. Backtesting helps you prove that your answers are sound. It's the bridge between theory and execution. A trader who skips backtesting is like a soldier entering battle without training. He might have courage, but he doesn't have preparation. And the market, the greatest battlefield, doesn't spare the unprepared. You can't test your courage in real time and expect to survive. You must drill it, day after day, with charts, records, and repetition. That's where confidence is built, not in the thrill of live trading, but in the quiet hours spent studying what has already happened. Tell me, how much time do you spend reviewing your trades? Once a week? Once a month? Or do you just move on to the next one and hope for better luck? Because hope is no strategy. Let me tell you this, every great trader I've known had one thing in common. They treated their backtesting like sacred work. They didn't rush it. They didn't manipulate results to make themselves feel smart. They looked at the cold truth and shaped their methods around it. You can't bend the market to your will, but you can shape your approach to fit the market's behavior. That's the essence of backtesting, adaptation through understanding. The hardest part, though, isn't collecting data. It's staying honest with yourself while you interpret it. The temptation to cherry-pick results, to say, oh, I wouldn't have taken that trade, that's what ruins the whole exercise. Backtesting is only valuable if you treat every signal the same way you would in real time. No excuses, no hindsight adjustments. Be ruthless with your process, because the market will be ruthless with you. So when you sit down tonight and pull up your charts, don't just look for what could have made you money. Look for what would have cost you money. Write it down. Study it. That's the tuition you pay to the market. You can't avoid the lessons, but you can choose to learn them the cheap way through backtesting instead of the expensive way through live losses. And as you keep testing, something remarkable happens. You begin to see the market differently, not as chaos, but as rhythm. Not as random motion, but as recurring behavior. That's when backtesting turns trading theory into verified evidence. That's the dividing line between the amateur who hopes and the professional who knows. Every trader has a theory. Some say price always comes back to the mean. Others swear by breakouts, trends, or volume spikes. But here's the truth: a theory, no matter how convincing it sounds, is worthless until it's proven through results. That's where backtesting steps in. It strips away the imagination and puts your idea face to face with the market's history. Because the market is the final judge. It doesn't care about your opinions, your education, or how good your logic sounds. It only cares about how your trades perform when real prices move. Tell me, would you trust a doctor who never tested his medicine? Then why would you trust a trading theory that's never been tested on actual charts? Backtesting is the laboratory of the trader's mind. It's where speculation meets verification. Too many traders live in the world of if. If this pattern works, if that indicator is right, if I had entered here, I would have made a fortune. But those are fantasies. Backtesting replaces if with did. Did this pattern work historically? Did this setup deliver consistent results? Did this rule protect me during volatility? When you begin to ask those questions, you stop being a dreamer and start becoming a professional. Because professionals don't depend on luck, they depend on data. When you backtest properly, you're not just collecting numbers, you're gathering truth. Every trade you mark down, every win or loss you record, becomes a piece of evidence. You start to see patterns that repeat, conditions that favor your strategy, and circumstances that destroy it. You begin to understand not just what works, but why it works. You also see when it fails, and that's just as important. The market changes its character from time to time, and a trader who doesn't understand how his method behaved in past market cycles is like a sailor who's never sailed through a storm. You can't claim to know your ship until you've seen how it handles rough seas. The act of backtesting itself sharpens a trader's mind. It forces discipline. You have to define your rules, you have to stay consistent, and you have to record everything without bias. That process alone teaches you more about trading than any book or course. Because when you manually go through chart after chart, testing your method, you begin to see how often your emotions would have misled you. You see all the trades you might have taken too early or exited too late. You realize how deceptive the market looks in real time compared to hindsight. That's why backtesting isn't just about the strategy, it's about learning yourself. Have you ever noticed how easy it is to see the perfect setup in the past, but so difficult to act on it in the present? That's the emotional gap backtesting helps you close. A tested theory becomes a foundation of confidence, and confidence is not arrogance, it's quiet certainty born from proof. Once you know your system has stood the test of time, you don't panic when a trade goes against you. You don't jump out of position just because the price wiggles a bit. You've already seen, through hundreds of past trades, how your setup behaves. You know what normal drawdowns look like. You know what signals matter and which are just noise. Without that evidence, you're just reacting to every flicker on the screen. With it, you're executing a plan based on facts. But here's the part most traders avoid, the truth that backtesting often reveals more failure than success. The first few times you test your idea, you'll probably discover it's not as good as you thought. Maybe your stop loss is too tight. Maybe your profit target is unrealistic. Maybe your entry is sound, but your timing is terrible. That's where most people quit. They don't want to face that their perfect idea doesn't hold up under scrutiny. But if you stick with it, if you refine, adjust, and retest, you begin to find the real edges. The market rewards persistence, not pride. You see, the purpose of backtesting isn't to find a flawless strategy. It's to uncover a reliable one, something that wins more than it loses, and keeps your losses smaller than your gains. That's the secret every successful trader learns eventually. A system that wins 55% of the time with twice the reward of its risk is far superior to a flashy setup that only wins occasionally but looks impressive on paper. Backtesting shows you those details. It tells you the truth about your system's probability, expectancy, and resilience. And once you know those numbers, you can finally trade with clarity instead of hope. Think about it. If you were investing in a business, would you want to see its financial statements before putting money in? Of course you would. You'd look at revenue, expenses, consistency, growth. Backtesting is that same due diligence for your trading business. It's your financial statement for your strategy. Without it, you're investing blind. You might get lucky once or twice, but luck is no foundation for longevity. The traders who last, the ones who build real wealth, they test, record, and adjust. They know their strategy like an engineer knows his machine. When you start backtesting seriously, you begin to view the market differently. You stop chasing tips, signals, or opinions. You start asking, does this fit into my tested framework? That single shift separates gamblers from professionals. You realize the market is not unpredictable chaos. It's a collection of repeating behaviors that can be measured and prepared for. Not perfectly, but predictably enough to profit. And that realization only comes when you have verified evidence in your hands. It's funny how traders spend hours looking for a holy grail system when the real secret is just doing the work. Backtesting isn't glamorous. It's tedious. It's repetitive. But it's also the most honest education you'll ever get in the market. Every mistake you make during testing is $1 saved in live trading. Every flaw you identify is a future loss avoided. It's like building armor before stepping into battle, And the stronger your armor, the longer you survive. So, when someone tells you their trading theory sounds promising, ask them this: has it been tested, or is it just talk? Because in the end, theory is cheap, but evidence is priceless. And in trading, evidence is the only thing that stands between speculation and survival. The goal of backtesting is to find weaknesses, not just confirmations. That's the mistake most traders make when they start testing their strategies. They only want to see the parts that make them feel right. They scroll through charts, find examples where their setup would have worked beautifully, and nod with pride. But that's not backtesting, that's self-deception. The market doesn't reward you for being right once in a while, it rewards you for being prepared all the time. The purpose of backtesting isn't to prove you're a genius, it's to uncover the holes in your plan before the market does it for you. Because trust me, the market always finds your weaknesses if you don't. When you look at a trading system, what you're really looking at is a collection of assumptions. You assume that a breakout will continue. You assume that a pullback will hold.